Ladies and gentlemen, welcome to our channel Polar Vega. In today's video, we shall speak about the role of news in a trader's life. News of any kind, be it geopolitical, economic, financial, fiscal policy related, monetary policy related, industry related, or the regular statistical economic data released / published every week by different government bodies. Before we move on to our video, let's talk about the disclaimer / disclosure clause. The contents of this presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 22nd of a series of interactive videos aimed at educating our viewers about basics of trading and investment. News could have varying effects on different kinds of time frames and on different time charts. What could appear as a blip on a daily chart could appear as an explosive, huge candle on a minute's chart. Therefore, we must study the effect of news on different time frames, on different industries, on different sectors, and in different kinds of environments. We shall be looking at the effect of news in detail on the next few slides. Effect of news on trades with different lifespans. Trades with different lifespans can get affected by the same news in different ways. Some news as they break out can cause ripples or huge explosive moves depending upon the information revealed and can have a huge impact on short-term trades. The effect of the same may die down in a few minutes / hours and may just be a short-term noise for a long-term trade. Sometimes news can affect and control the overall direction of a long-term trade and may not have an impact at all on short-term trades. News affecting specific industries. Sometimes news is industry specific and affects only those assets that are directly or indirectly related to the industry or sector. Examples could be export / import, regulating government policies, or duties or taxation on certain goods, or change in the supply / demand of the products of the industry, or changes in the supply / demand of the sources of production of the goods, or the geopolitical events directly or indirectly affecting the demand / supply of the products from the industry. Innovation / introduction of competitive goods in the market, sudden change in fashion or taste of people can lead to a change in demand or supply of the goods produced by the company or the entity producing the services. Hence, the valuation of the company or the entity changes. Economic indicators, change in fiscal / monetary policies, and revision in expected valuations. Economic indicators, change in central government interest rates, borrowing of public funds by central banks by issuing bonds or buying back of these bonds, tightening / easing of monetary policies, government incentives or restrictions on certain goods or trades directly or indirectly affect markets in short as well as long term. Statistics on the financial health, economic growth or slowdown, inflation, employment creation, etc., are generated by governments of various countries at regular intervals to reflect the overall economic condition of the country. These numbers directly affect the market's estimation of valuation of goods, commodities, services, bonds, equities, mails, services, currencies, etc. In other words, the release of these statistical data every month or every week helps the traders reassess the values of assets being traded on the market. A simulation of information by markets. Markets are in a continuous mode of assimilation of information from all kinds of sources. At any given moment, markets behave in accordance with the sum total of all the information already revealed and the expectation of unrevealed information which everyone is trying to get from some source or the other. The explosive moves are the result of the surprise or shock immediately generated when the revelation of an information coincides or contradicts the market expectation. This generally affects short-term day traders or at the most the swing traders whose trades do not last beyond a day or two. For the long-term traders, the explosive moves are plain noise which die down in a few minutes to a few hours at the most. However, some news, especially the unexpected ones, could completely change the direction of trend if the market finds it believable and alters its expectation with the release of the information. Treatment of news by various traders. Some or most traders try to stay away from the market when they expect the market to go volatile a few minutes around the time of announcement of news. However, there are some traders who love to trade the volatility induced by any expected announcement at a particular time of the day or the week. For them, the news acts as a market maker and propels the price to fill their orders or makes them earn quick profits by accelerating the movement of price towards the targets. These trades are highly risky and which I advise every regular trader to stay away from it. However, one cannot deny the dichotomy because of it were not for the huge volume of orders getting triggered and continuously filled with the announcement, the explosive candles would never form or these moves would never occur. Quick profit trades or release of news. If you're the kind that likes volatile market and quick profits, then you must be nimble at getting in and out of trades while the market is trying to digest and assimilate the freshly released information. Your stop losses need to be tight. You need to be quick at assessing your supply/demand zones and must rely on market entries as you may either not get filled at your limit entries or get stepped out immediately after getting filled. So nimble is the word to play the market and momentum is the tool that you use. These trades are highly risky and we advise all regular traders to stay away from the order screens during the periods of excessive volatility or when the Vega is gone polar. Dependence of market mechanism on the publication of news at regular intervals. Although we are trained to stay away from the market at times of important announcements and are told not to trust explosive candles generated by news as they may not have been generated by orders placed by rational buyers/sellers, but we must admit that news slash information is needed to make the right decision about our trade. Also, it's the expectation of buyers/sellers that allows them to place their orders and one cannot have expectations while trading in a vacuum. For price to move, we need both buyers and sellers to come to the market. Price can move only when orders get filled in any direction, and for orders to get filled, traders must have expectations for price to move, and these expectations can be formed only when news is available for all kinds of sources to help traders make the so-called informed decisions. News or technical analysis with historical data. Having elaborately spoken about news on this video, we would like to say that one needs to develop and hone the quality of analysis of information in the right way and test himself/herself quite a few times to see if the decision arrived at coincides with the market or is counter to the market's way of looking at the information. Market has its own mechanism of analyzing information almost instantaneously with its release, but there are times when markets go wrong in analyzing an information or are misled in their analysis in the short term, and as a result, reversals of movements are not very uncommon after markets have exploded in the wrong direction. Therefore, we always stress upon the technical analysis using historical data and not trying to second guess the movement of markets upon the release of information. Once the information has been totally digested and assimilated, the price always reverts to the correct direction. So we say, see the big picture, establish trend, establish curve, measure your profit margin, and enter your trade. We hope you enjoyed our video presentation on the importance and role of news in the life of traders. In our next video, we shall speak about the monthly, weekly, and daily routines to discipline us as traders. Routines, as mundane as they may sound, they are certainly the backbones of successful traders. If you liked our video, please give us a thumbs up and press the button underneath to subscribe to our channel Polo Vega and watch all our videos. You may also visit us at our website www.polovega.com or get in touch with us through our Twitter handle @PoloVega. Please keep saving, keep investing, and keep getting wealthier until we meet next. We thank you for watching our video, and please like, share, and subscribe to our channel Polo Vega.